Hi friends, as per a report by Axis Bank's Burgundy Private Limited and Hurun India, NSE, which is National Stock Exchange, is the most valued unlisted company at a valuation of around 4.7 lakh crores. And this report came out in the month of February 2025, and as per this report, if you look at the top 10 unlisted companies by valuation, NSE is at number 1, commanding 4.7 lakh crores of valuation or market cap, followed by Serum Institute of India, which is at around 2 lakh. Look at Zoho Corporation, Zerodha, for example, at number 4. So these are some of the most valued unlisted companies as per this report. Now 4.7 lakh crores of valuation is a no joke, because if we compare this with listed companies, for example, Reliance Industries Limited at the time of recording this video is commanding a market cap or a valuation of around 17,46,000 crore, followed by HDFC Bank, TCS. And if you go down to the list here, you will see ITC Limited at number 10 in terms of the valuation at around 5,42,000 crore. Then comes Kotak Mahindra Bank, which is at 4,50,000 crore. My point is very simple. If NSE was a listed company, NSE would be at around number 11 as per this report in terms of valuation. So NSE would have been a giant cap in terms of market valuation if NSE was a listed company. 4.7 lakh crores of valuation is a huge valuation. Now, I'm not saying that this is the correct valuation, because different companies will value NSE very differently. But this is one report that is out there in the media, in public domain. And therefore, it also begs a question that what makes NSE such a special company that this company is commanding such a huge valuation at 4.7 lakh crores. And also from an investor's perspective, from retail investors like you and me, how do we go about looking at our options in investing in NSE? So this is going to be a super interesting video, because in this video, I'm going to break down 4 things for you. Number 1, what makes NSE a unique business? I will present you some mind-boggling data that you are not going to find easily somewhere else. Point number 2 is I will speak about financial health of NSE. We'll also do some comparison with BSE so that you get the context right. Number 3, I will speak about shareholders of this company, who actually owns NSE. Very interesting data point that you all will love. And at number 4 is NSE's IPO possibilities, because there has been news in the media that NSE might come up with its IPO. I'll talk about that, number 4. And number 5 is in unlisted space, how to go about looking at companies like NSE. I am not going to give you any buy-sell recommendations here. My intent is to teach you, give you a 2 minutes crash course about unlisted companies as well, using NSE as an example. This is not a promotional video. This is not a buy-sell sort of a video. This is for serious investors who really want to understand how to go after good businesses and how to, more importantly, understand what makes a business really good business. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. If you want to practically learn investing, you can consider joining my YouTube community. I post almost on daily basis on various assets, for example, stocks, mutual funds, ETFs, IPOs, many things that you are going to learn practically. The feedback of the community has been excellent. Simply go to my channel, find the join button and be my guest. With that, shall we get this video cracking? Let's go. So let's start with point number 1, which is what makes NSE such a unique business. Have a look at my screen and you will see the market share that NSE commands within India. This is a local market share. And what you will note here is when it comes to cash market, NSE holds 94% of market share. The remaining goes with BSE, 6%. So NSE is huge. If you look at even futures and options, then NSE holds 99.9% market share in futures and 87.5% in options. Look at the currency trading. For example, futures and options again in currency, 93%, 100%. Interest rate futures, 100%. My point is very simple, that NSE within India is the number 1 exchange. And if you look at the market share across the segments, we can clearly see that NSE is the leader. BSE is very small as compared to NSE. Again, I'm not trying to demean BSE. See what happened to BSE stock. It rocketed like anything. That's not the point here. The point is that NSE is the leader when it comes to locally. What about globally? If we talk about global data as well, if you look at this data, you will see that NSE is the largest derivative exchange globally. I mean, look at any other country, NSE stands number 1. And if you talk about the largest equity exchange, then NSE is at number 2. I think US is at number 1. And to be honest, 10 years down the line, I won't be surprised if NSE gives US a run for money. This is the scale that we are talking about. And if I were to summarize these 2 slides, what it tells us is that NSE is truly a monopoly business. Point number 1. Point number 2, the scale of NSE tells us that it is too big to fail. This is huge. This is the backbone of financial ecosystem of India. In fact, let me present to you how much of revenue NSE is generating for Indian government. Have a look at this data. You will see in the first 9 months of FY25, around 45,400 crore worth of money has been generated by NSE for Indian government. You can see things like STT, which is Securities Transaction Tax, income tax, GST, stamp duty, SEBI fees. If you put all of this together, 45,400 crores of revenues in 9 months in FY25. My point is that it is too big to fail. It is the largest monopoly when it comes to exchanges, and this also has a global standing when it comes to global markets. Let me now speak about point number 2, which is the financial health of NSE, and we are going to do some comparison with BSE. Again, very interesting segment of this video. Please watch it carefully. Have a look at my screen. What you see here is that in the last 4 to 5 years, how the top line of NSE has grown. It has grown at 43% CAGR in the last 4 years, and as of FY24, company did around 16,400 crores of top line or revenues. Now, if you remember in the beginning of the video, I said that NSE, if it was listed today and at 4.7 lakh crores of valuation, it would have been at around number 11 or number 12 in terms of the listed companies list. So it should have been a giant cap or a large cap by size. And tell me any large cap or giant cap that is growing its sales at 43% CAGR. I mean, you won't find it. You look at TCS, you look at HDFC Bank, their revenues are growing at 2%, 3%, 4%, right? Here we are talking about 43% of CAGR growth in the last 4 years. So to me, it is like a giant cap that is growing at like a small cap sort of a rate, because phenomenal growth in terms of top line. Again, I'll give you some breakdown as well, but this is point number 1. Point number 2 is that if you compare this with BSE, where does BSE stand? So have a look at my screen and you will see that in FY24, we are comparing like for like years here. BSE did total 16,000 million rupees. This data is in millions. So if you convert this into crores divided by 10, it comes around to be 1600 crores. So 1600 crores of revenue BSE did, and NSE did around 16,400 crores. So clearly NSE is 10 times bigger than BSE in terms of the top line that we have seen in FY24. And I think that gets reflected in the market share, that NSE holds 90%, more than 90% of market share, versus BSE is very small when it comes to market share. Of course, the growth of BSE might be slightly higher than NSE, but if you look at the size, NSE is really huge as compared to BSE. Now, second, even more important data point that you need to know is the EBITDA margin. Have a look at my screen. You will see in the last 4 to 5 years, the EBITDA margin of this company has been more than 70%. In FY24, it stood at 71%. This is a huge margin. I mean, you would not find companies that are delivering even 40% EBITDA margin. 71% EBITDA margin is huge. And what does it tell you? It tells you that the expenses that the NSE incurs is very less as compared to the top line that it makes. And again, I'll speak about some of these data points, but this is phenomenal. What does it do? It actually helps company to have a very healthy PAT margin, profit after tax. Again, have a look at my screen. You will see the PAT in the last 4 years in terms of CAGR has grown at 44% growth. Again, huge growth. And if you look at the profit after tax in FY24, the company did 8,300 crore, which is almost 50% PAT margin. I've been reading a lot of companies, believe me or not, I have not found companies that are giving PAT margin upwards of 20%. I mean, 10 to 15% of PAT margin is what companies tend to achieve, and they struggle, to be honest. Here, this company has delivered almost 50% PAT margin, which is mind-boggling. And this happens mainly because the expenses of this company is very low and the top line is very high. Why the expenses are low? Again, I'm going to speak about that as well. But the point here is that remember 3 things about this company's financial health. Number 1, top line is growing at a very healthy rate. EBITDA margin is very high, which is very good for a company's financial health. And number 3, PAT margin is also very high. It means that the company is generating lot of cash for themselves. Therefore, company is cash rich. And what happens with this cash? What does the company do? They invest this cash as well, generating more income on top of this cash. And also, in my view, this PAT margin could improve further. Now, coming to expenses, have a look at my screen and you will see the expenditure breakdown that the company has shown in the last 9 months or last quarter as well. And what you will note here is that the company does not have a lot of expenses coming from, for example, capex, that many other machineries or capital expenditure heavy companies will do. Here the maximum cost that you will see is 22% of their cost is coming from regulatory fees. Employee cost is the next item, 15%. Of course, other expenses are 45%. But here if you see, this is not a capital intensive company as such. It is very lean. All it needs is really technology, right, to run the systems. It needs people to run the system. It needs some regulatory costs to be covered. And of course, there are some other cost as well. But all in all, if you see, the expenses are really low, and that gives the company huge EBITDA margin and huge PAT margin. Now, in terms of the income that I spoke about, let me also break it down for you, because there is an important point that you need to understand about NSE's income source. Have a look at my screen, and again, you will see 72% of company's income comes from transaction charges, right? So this is the one that is generating a lot of cash for the company. If you look at the listing services, data center, data feed, all that have got tiddly bits here, 2%, 6%, 1% as well, but 72% of their income is coming from transaction charges. And as the number of transactions on exchange grows, this company top line may grow further. And right now in India, we still are very low penetrated when it comes to the demat account. Compare this with developed countries like US, where the demat account penetration might be more than 60%. In India, it is still low. So the number of transactions that we might see 10 years down the line might be actually growing, and that would continue to throw money at this company. This is what my point of view is. I could be totally wrong here. Again, if you are not agreeing with me, let me know in the comments on this particular point. But more importantly, this also presents a risk for a company. Why? Because if you look at the breakdown of these transaction charges, what you will note here is that if you see this blue portion of the bar here, this is the equity options. So 78% of the transaction charges are coming from options, equity options. So tomorrow, if let's say, for example, there is a regulatory change in the equity options world, and if the number of transactions all of a sudden drop in the options world, then what is likely to happen? NSE's revenues may get a hit. So anytime you're tracking NSE, what you need to know is that equity options, what is happening in that world? Is SEBI making some changes, for example? Is regulation becoming more heavier? That might take the hit in terms of the transactions. That is where the maximum risk for this company right now lies, in my view, because looking at their income revenue sources, what is it telling me? It is telling me that their transaction charges is the main money that they are getting it from. And if that gets a hit for whatever reason, then they are having a huge risk. Let's now move to point number 3, which is who owns NSE. Before I do that, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to do a lot of research for you at zero cost. With that, let's move to point number 3, which is who owns NSE. Have a look at my screen. Please do not worry. It's not complicated. You just need to focus on 3 data points. First data point is promoter and promoter group. If you look at this column here, this is 0%, meaning that there are no promoters on NSE. NSE is a professionally run company. There are no promoters for NSE. And that brings me to a very, very important point, which is that typically when IPOs come out in the market, promoters tend to make a lot of money because they do offer for sale. And there is nothing wrong in it, because they have been a promoter of a company. And when a company is doing really well, raising funds for themselves, they would definitely like to book some profits. But the side effect of that sometimes is that there is a lot of hype that gets created during the IPOs. The valuations go crazy. Here, because the promoters are not there, the hype, or the unnecessary hype, I can call it, is slightly low because there are no promoters here. But if you look at the second holding here, which is the public has got 64% of the stakes in this company. And if you look at the third category, which is non-promoter, non-public, again, I'll give you a breakdown here, which is around 35% of the remaining stake. So let me now break down this 35%, which is the non-promoter and non-public, because public, it could be high net worth investors, it could be retail investors, it could be many other people here, but that is 64%. Let me break down this non-promoter, non-public here. If you go and have a look at this data, again, let me simplify this very, very clearly. Insurance companies like LIC, General Insurance Corporation of India. Insurance companies, they have a huge stake in NSE, around total 19%. Okay. And the remaining 10.27%, if you see, out of 35%, mota you can say 30%, right? So corporations here, which is, for example, Stock Holding Corporation of India Limited, SBI Capital Market Limited, all these companies, even State Bank of India has got 3% stake in NSE. These companies have put together around 10% stake. So from a shareholding pattern point of view, the positive news for investors is that there are no promoters. So when it comes to IPO, hopefully the hype is not there in terms of crazy valuations. Again, valuations is a very, very dark game. Really can't really predict what the valuation should be and what should it not be. But here the point is that please understand that there are no promoters of this company. You may now say that, Rahul, this information is all great, but tell us about the NSE's IPO. So here is some brief 2-minute commentary about the IPO, and there is an important concept that I want to teach you about IPOs. If we believe this 4.7 lakh crores of valuation, and if we, for example, assume, right, this is just an assumption, there is no information as such. If we assume that NSE offers, let's say, 10% of the stake in the company via IPO, that means that 10% of 4.7 lakh crores of valuation will be around 47,000 crore. Then 47,000 crore of IPO will make NSE IPO the largest IPO in India, because if you compare this with the last few biggest IPOs in India, for example, Hyundai's was 27,000 crore, LIC 20,000 crore. If it comes out to be 47,000 crore, again, this is just an assumption. I do not know whether 4.7 lakh crore is the right valuation. And number two, I do not know whether they will offload 10% or not. But some rough assumptions I've made here. If not, number one, NSE definitely may become the top 5 largest IPOs in India. So there will be a lot of hype at that time around this IPO. And also the fundamentals of the companies are really, really strong. As we could see, there are no promoter vested interests here. That will make this IPO a quality IPO in my view. But again, it all depends on what is the price at which the IPO is issued. What is the listing gains that we see? Again, there are a lot of things. I will do a full video on the NSE IPO once the IPO is confirmed. If you have not yet subscribed to my channel, consider subscribing because you can get all these good updates timed. Now coming back to NSE's IPO history, actually NSE filed for IPO back in 2016. Have a look at my screen. You will see I've taken this screenshot from their draft RHP document that was filed back in 2016, and because of various reasons, for example, as you can read here in this article, regulatory issues, some scandals, some market conditions, there were a lot of delays in the NSE's IPO, and even now in 2025 it is not confirmed. SEBI is looking into it in terms of whether they will approve this IPO or not. We don't know yet. But right now the talks of NSE IPOs are out in the media. We don't know what is likely to happen. But important concept you need to understand about any IPO is that I want you to calculate the P ratio of a company. For example, here, let me take this as an example. If you go to their annual report or quarterly presentations, you will find their earning per share data. For example, if you see NSE's EPS, 9 month of FY25, the EPS which is earnings per share is 38.54. Now divide it by 9 so that you get monthly EPS, and then multiply it by 12 so that you get annual EPS. The annual EPS comes out to be here 51.38, meaning that this company in the last 12 months have earned 51.38 per share. Now, if let us say that the issue price of this particular IPO comes out to be 1600 per share, I've just made it up. Again, it's a speculation. I'm just using this for a simple calculation here. So divide this 1600 price per share, which is the issue price, divide by the EPS, and you get to the PE ratio of this company, which comes out to be around 31 PE. This is the way you can calculate the PE ratio of any IPO company. And what you can do is now benchmark it against the peers in the industry. For example, now you can go and compare the PE ratio of this NSE with maybe BSE company or maybe wealth management company and see whether you like this PE ratio or not. That will tell you whether you should apply for the IPO or not. Please make sure you're doing your homework. Otherwise, you are blindly investing in IPOs. Let me now speak about point number 5, which is the opportunities in the unlisted space. Is there an opportunity to go and invest in NSE using the unlisted space? Now, I'm not going to give you that you go and do that or not, either ways, but I want you to understand this concept when it comes to unlisted companies. Have a look at my screen, and what you will very quickly note here is that on the y-axis I've got valuations, on the x-axis I've got time period. Now let us assume that a company starts somewhere here, okay? This is where the company is launched. Now for a number of years, the valuation of the companies can grow up, right? Because if the company is a growth company, then the valuation might start to grow up. Now what happens is that, let's say that somewhere here, the company is launching their IPO. Typically what happens is that pre-IPO, let's say 6 months before the IPO, 1 year before the IPO, there might be some hype that gets created in the even unlisted world, because all of a sudden people know that this company is going to hit an IPO in the 6 months time, 1 year of time. They may start to buy the company here. So this hype could be there. Now, when it comes to unlisted companies investments, I have a theory. My theory is that the best time to invest in an unlisted company, if you really like a company, is somewhere here, which is when the company is nowhere in the news of IPO. Because this is where the valuations are really, really good, because nobody is really talking about it. This is the best time to invest in a company, right? In terms of unlisted space. The second best could be somewhere here when the hype is created. It really depends on your risk appetite. If you're an aggressive investor, you might take a call here to invest even during this pre-IPO hype, because what could happen here is you need to understand two scenarios. Scenario number one is as soon as the company gets listed here, the stock price may go up because of further hype. Because hype gets created during the IPO, post IPO also sometimes the stock prices go up. Again, I'll show you some data as well in a minute's time. So you might make some gains here. And scenario number two is that after some time, people might realize that the valuations are huge. Price discovery may happen here and the stock prices may come down. So you might lose some money during this second scenario as well. Especially the point that you need to know is that for the 6 months of period, you cannot really sell if you buy an unlisted space here. This is very, very important. So unless you are believing in a company for a long-term perspective, you might not want to play this game of picking from unlisted company and then, going through this volatility. If you're an aggressive investor, if you have a huge conviction in a particular company, you understand valuations, then yes, of course, you can take a call at any point in time, either here or somewhere here, but you would have to withstand this volatility. I see a lot of people buying a stock from the unlisted company. I don't know, Swiggy, Zomato, they might have bought it, 300 rupees. And all of a sudden when the 600 price hits, they are very happy. But all of a sudden when the price comes down to, 300 again, then they are very sad because they can't do anything with it. They can't really sell the stock because they're stuck with this 6 months of holding period. Also, please understand, anchor investors, they play a huge role in this price discovery somewhere here, because these anchor investors would have some lock-in period depending on the company, might be 6 months, 1 year, 2 years. And as soon as the lock-in period expires, they would start to book some profit because they might have got stocks somewhere here before IPO and they may want to book some profit. So if you want to venture out in unlisted space, please make sure that you understand valuations of a company. Number two, you understand that you're okay to hold for a stock at least 6 months after the IPO, and you're okay to withstand that volatility. You're not going to be afraid. And number three is only look at unlisted space if you really, really have conviction in a company 5 years down the line. It's a long-term view. Again, I've given you my view, not a recommendation here at all. I really hope that you understood a lot of things in this particular video. If you did, please press the like button. Let me know in the comments a simple thank you. It will motivate me to bring such content for you at zero cost. Also, go and explore my YouTube community, where I practically speak about a lot of assets that you're going to learn and become a better investor. That's the entire intent. With that, I hope to see you in my next video. Until then, keep rocking.